Investor Insights is back by popular demand for a second installment. Now, in this series, I'll be looking at more complicated economic concepts, and as a consequence of the Fed's actions, why the imminent crisis is totally unavoidable. My mailbox has been totally inundated by viewer questions, and I'm sorry that I haven't been able to get back to everyone, but I'm planning a whole bunch of videos to answer most of those questions so that people can take part. Essentially, I'll be looking at more a lecture type series, so rather than the odd update here or there, it's more educational to look at each subject as a whole. We'll be looking at the USA, Europe, Australia, Asian countries, China, Japan. We're going to be looking at all aspects of asset classes. We're going to be discussing the precious metals, gold, silver, platinum. We're going to be looking at real estate, and in particular, judging from the number of views on the real estate videos, we'll be focusing more so on the impending real estate crisis that's coming in this country, and just the fact that most people ignore the warning signs and ignore the fact that housing is no longer an investment in Australia. It's important to know why, and I'll be taking a purely objective and statistical analysis of why this bubble is close to coming to an end. We're going to be looking at, as I said before, Ben Bernanke's legacy at the Fed, the aftermath of, well, what QE is going to leave behind, which is just going to be a financial desert wasteland. But essentially, I'll also be looking at possible solutions and possible courses of actions that can be taken now. It's probably already too late, but what can the Fed do, or what can the policymakers do to try and alleviate all these problems? Just as a teaser, I've been saying since day one, since QE was introduced, QE1, QE2, QE3, well, QE infinity, that the Fed is never ever going to taper. That's actually the subject of the very first video, and I thought that I would do this on the eve of Ben Bernanke's last Fed meeting tomorrow night, just so that people can people who trade or who invest, basing their decisions on the fact that the Fed's going to taper, are going to get a bit of a rude shock. Although, as I've been saying, it's never going to happen. The Fed has entered a black hole of financial self-destruction, and anything it does is going to bring that destruction forward. So it's stuck in a rut between, obviously, a rock and a hard place, and not only will it not taper, but as soon as it does, the economy is going to go backwards, and they're going to have to take that back. And in fact, to make the economy go forward, which is in itself a just a financial dream, to be honest, the Fed has to actually increase its purchases, and has to increase its purchases to not just bonds and mortgage-backed assets, but it has to expand its purchasing into all sorts of asset classes just to maintain asset prices high. Now, as I said, I wish you many happy returns if you're trading, and keep on watching, because these lecture series are going to be a blast.